Did you know that the twin range filter might be the most important buy-sell indicator on TradingView? Well, at least according to me. In this video, we're gonna combine this indicator with two other technical indicators and some price action concepts to create a strategy that is super profitable. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, let's begin by adding all the indicators that we need. The first indicator, as mentioned earlier, is called twin range filter. To add it to your chart, you're gonna go to TradingView, which is the trading platform that I'm gonna be using. If you need to sign up, the link for that will be in the video description. Next, you wanna load the 5-minute time frame of CAD-CHF, but you're not gonna be limited to this because this strategy can actually work on any trading security and on any time frame. Next, click on indicators and type in twin range filter, and you're gonna select this one created by Colin MCK. Now, the twin range filter by Colin MCK combines two range filters to average and smooth out trading signals, offering a clear improvement over standard ATR setups. To make use of this indicator, we're gonna go to the settings of it so we can change some features. On the Inputs tab, you wanna change the fast period to 27, fast range to 2, slow period to 55, and the slow range to 3. After that, click OK. Now, as you can see, this is a really straightforward indicator. This is a signal to buy, and this is a signal to sell. How to use it to trade is going to be based on these signals. Whenever it says long, we go long. Whenever it says short, we go short. Pretty self-explanatory, don't you think? But using this indicator this way is going to be a guaranteed way to blow your account. But in order to craft a simple and profitable strategy out of this indicator, we're going to need to add two more indicators to our chart. On the indicator search tab, type in gChannelTrendDetection, and it's going to be this one created by JGitSoft. The last indicator that we're going to add is this one called WADA ATAR EXPLOSION V2. This one by Cheyenne KM. Next, double-click on the WADA ATAR Explosion indicator, and then on the Inputs tab, you want to change the sensitivity to 100, the fast EMA length to 25, and the slow EMA length to 50. On the Style tab, you want to reduce Color 0's opacity to 0%, and then increase the opacity for Color 1 to 100%. Then for the downtrend, you're going to do the same. Color 0's opacity goes to 0%, and Color 1's opacity goes to 100%. Oh, actually, this is too bright for a red color, so we're just gonna keep it at 50%. And then change the explosion line to something a bit brighter. For me, I'm gonna go with white. For the dead zone, we're gonna do the same. Change it to white. And then click OK. For the gChannelTrendDetection indicator, the default settings of it are gonna work fine, so we're not gonna change anything. We will only disable the Show Cross option. After that, click OK. So, at this point in time, you probably are thinking,
but how do we use these three indicators to take long and short positions?
Well, I'm gonna show you, just after introducing the forex broker called Fentura. I've been using Fentura for quite some time. As you can see here, this is my live account on MT4. Yes, MT4 is the trading platform used by Fentura. The reason why I think Fentura is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of us who love high leverage. If all of this isn't enough, they're also gonna give you a 100% deposit bonus for all your first deposits of between $100 all the way to $50,000. So if you deposit, say, $5,000, guess what? They're gonna give you a bonus of $5,000, giving you a total of $10,000 to trade with. To access the bonus as well as all the other perks, sign up to Fentura using the link in the video description. Now, where were we? We're supposed to go over how we can use these three indicators to take long and short positions. But before that, here's a little bit about what these two extra indicators are gonna serve. The WADA ATAR Explosion indicator is a momentum indicator. We're gonna be using it to identify bullish and bearish momentum in the market to make sure it is high enough for us to take long and short positions. A green histogram like this one indicates a bullish momentum. On the other hand, a red histogram like this one indicates a bearish momentum. Whenever the histogram goes above this white line, known as the explosion line, that basically means that the market is exploding, at least in terms of market momentum. The momentum of the market would be high enough for the market to be considered exploding with trading activity. And that is exactly how we're going to be using this indicator to trade. We're going to be looking for this histogram to go above the explosion line, and then we take the trades. Now, what about the gChannelTrendDetection? What are we going to be using it for? Well, this indicator is literally called gChannelTrendDetection, and its use is right there in the name. It's a trend indicator, so we're going to be using it to identify bullish and bearish trends in the market. When this trend cloud is colored green, like here, this indicates a bullish trend. Conversely, when it's colored red, like here, this is a bearish trend. Now, to take a long position with our strategy, these are the conditions. So the first condition is to identify that the market is in a bullish trend, so we can ride that trend all the way to take profit. For that, we're going to be using the G-trend indicator. We need this trend ribbon to be colored green, like here, to indicate a bullish trend. The second condition is to look for a long signal to be printed by the twin range filter. This long signal is going to indicate our entry candle. So for example, here, this is our entry candle. Now, the third condition is to make sure that on this signal candle, the market had a strong enough bullish momentum to push the price in the direction of our trade. To identify the market momentum, we just make sure that this corresponding histogram bar was colored green and that it also closed above the dead zone line as well as above the explosion line. Now, once the first three conditions are met, our last condition is going to be to add a bit of price action. So you basically take a look at your chart and you want to see a resistance level where the price did a break and a retest. So if we look on the left side of this entry, we will see that this was a resistance level. To draw it and extend it to the right, I will draw a rectangle starting from the top of the highest candle to the low of the same candle. And then I'm going to extend it to the right. And as you can see, this is the break above the resistance level, and these multiple touches indicate the retest of the level. Now remember, for a retest to be considered valid, these candles shouldn't close under this rectangle. If any of these candles were to close down here, this trade would become invalid. But of course, none of the candles closed under, so this is a valid setup. So we enter a long position here, set the stop loss right under the most recent swing low, and then for the take profit, we're going to target 1.5 times the risk. If we let this trade run, you will actually see that it was profitable. Now, to understand these conditions even better, let's go over one more long trade. Now, as you can see here, a green trend ribbon indicates a bullish trend. Within this bullish trend, we wait for a long signal to be printed by the twin range filter indicator. After we have the signal, on that same candle, we just look at the corresponding histogram bar down here. We need this histogram bar to be colored green, and it should also close above the dead zone line as well as above this white explosion line. And then to add a bit of price action, we need there to be a resistance level, and the price should do a break and a retest of that level. If we look on our chart, this is a resistance level. To extend it to the right, we basically draw a rectangle starting from the top of the highest candle to the lowest point of the same candle, and then we extend it to the right. Here is the break above the level, and these multiple touches indicate the retest of the level. None of these candles closed under the level, which makes this entry a valid entry. Now, for a short position, we're gonna do the opposite of everything we did for the long positions. Here is what I mean. So the first condition for a short position is gonna be to identify that the market is in a bearish trend. For that, we need this trend ribbon of the G-trend indicator to be colored red, and the price should be trading under it. This indicates a bearish trend. Now, within this bearish trend, we're going to be looking for a short signal to be printed by the twin range filter. This short signal is going to indicate our entry candle. Next, we need to confirm that by the time the short signal is printed, the corresponding histogram bar from the WADA ATAR explosion indicator indicates that there is enough bearish momentum in the market to push the price in the direction of our trade. To confirm that, we just make sure that the corresponding histogram bar, basically this last histogram bar, was colored red and that it closed above both the dead zone line and the explosion line. After those three conditions are met, the last condition is going to be to identify a break and a retest of a support level. Looking at our chart, we can see that while there are many different support levels, one here, and one here, none of these were broken and retested by the price. The only one that was broken and retested by the price was this one. To see how it happened, we basically draw using a rectangle tool from the bottom of the lowest candle to the top of that candle. And then we pull this to the right. As you can see, this is the break of the support level and this is the retest. After the retest, we had our short signal indicating that the price may continue to go downwards. And remember, this entry wouldn't be a valid entry if any of these candles closes above this level during the retest. We can see here, no candle closed above the level, which means this is actually a valid entry. We enter a short position here, put the stop loss right above the most recent swing high, and for the take profit, we're gonna go with 1.5 times the risk. Letting the trade run, and it decides to hit take profit. In summary, the strategy showcased in this video leverages the power of the twin range filter to produce super accurate long and short positions. We combined a total of 3 indicators and added breaks and retests, which is one of my favorite price action concepts, to turn the twin range filter from a losing indicator to a profitable strategy. Now, remember to do extensive backtesting of this strategy to see how it would perform over a longer period of time. That is, if you're interested in adding it to your trading arsenal. Well, that's basically everything for this video. I really hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.